Alright, ICT traders, welcome back to the channel once again. And in today's video, what we're going to be looking at is not the normal currencies we've been looking at. This is a synthetic indices, and all of you that are trading synthetic indices, this video is going to be very, very handy for you. If you can give me your attention, let me go through what you need to know about synthetics and how to approach it using the smart money concept. Now quickly, before I go into the video, I'll be using MT5 anyway for all the analysis and then show you how to go about it. I don't want to use the trading view because the trading view chart, it's somehow difficult for me to get into it to just do some real-time analysis. I will just be using the MT5 right here. So quickly, who is this asset meant for? Because I know some of you are trading synthetic and you have no business coming closer to synthetic indices. Anyway, other countries, you don't have access to it in other countries. I don't think in America, in Europe, there are other countries that can't trade synthetic indices simply because Deriv broker doesn't give access to those people. I use Deriv for trading synthetic indices, not always. I think I have an active trade on step index right now. I'm about to be stopped out at break even anyway. You see my entry. Let me show you. Control T. Just $1. So this particular is something I trade most of the time. If I have, some small amount and I want to flip it, I just go on synthetic to trade it. Right now, you see this $200, I funded $100 and then I was able to raise it to $200. I withdrew the other $100 and then I'm trading the other $100. This $200 is basically profit. And you see, I've entered this trade. Trade has already moved to this area. I did not close because I was targeting somewhere bigger than this, and it's all part of the trading. Sometimes you face this in the market, so price is coming to remove me at break even. So let me tell you the people that should stay away from trading synthetic indices. Number one, if you don't trade with stop loss, if you don't like trading with a stop loss, please stay away from synthetic. Those of you who feel like you don't want to use stop loss in your trades, you want to use something called psychological stop loss, synthetic indices is not for you. Stay away from it. If you don't stay away from it, you will just give your life miserable experiences trading those assets. Secondly, those of you who make assumption, traders who make a lot of assumptions. Is that how we spell assumption? Okay, assumptions. Those of you who like making assumptions in the market, these assets is not for you. And I will tell you the reason by the time I go right on my MT5, the reason why you cannot make assumptions. Because this asset is so corny in such a way that it will pick a direction and you make assumption, yes, it is going to turn from here, it is going to turn from there, it is going to turn from there. Now quickly, what to know about these assets? It likes working with liquidity. It loves liquidity very well. See, liquidity, especially the higher time frame liquidity. Higher time frame liquidity. Let me go ahead and type it. Higher time frame liquidity. So please pay attention to this. Higher time frame liquidity is important for this asset. So if you are trading synthetics, please take note of this. So quickly, let me go back to MT5. So this is it. And as you can see, I am stopped out at break even anyway. So it's normal with the trade. The moment I start going into some profit, I just break even and then allow it to move for a long time. That's what I do trading synthetics. And some of you may not be able to do that. So I trade just two of them. I trade VIX 75, this one, VIX 75 right here, and step index. So this is the only synthetic indices I trade, VIX 75 and step index. Let's go back there and I will show you. So let's go to the VIX. Now the time frame I use is the 4-hour time frame. That is my big boy time frame, or the highest time frame I love looking at for liquidity area. So now look at what I'm saying. Notice what price is doing. If price picks a level Let's start from this point so that you would see. Notice what price was doing here. Price cleared liquidity above this area on the 4-hour. Immediately after doing that, it decided to shift location or to shift market structure and start coming down, clearing liquidity here, trading into this area. Came back up, crashing. Now, why am I showing you this? I'm showing you this because you need to know what price is doing precisely. Now, looking at the most recent price action, the last thing price did was that it cleared liquidity above here. For you to argue with this, you need to know where liquidity starts on a particular level. You see where this relative equal, do you see the bodies of these candles? Notice how they are almost equal at the exact point. So from the bodies of this candle above up to this area is filled with liquidity. So whenever ICT mentions that, it is simply where liquidity is. After clearing this liquidity, looking for a shifting structure in the lower time frame, you begin a new trend. And that is why I told you, you don't make assumption that price will just turn direction at a point. No. If price starts on the lower time frame, it needs to clear or to take it up to the next liquidity area for it to turn back. So what does that say about this? After sweeping this liquidity, price has to, look at this. Continue this movement up to the next level of liquidity. So imagine somebody making an assumption, let me bring it closely, that price is going to go bullish from here. You would only get crushed because price wants to come here from the higher time frame. So where price is going in the higher time frame is important for you as you trade this particular asset. So let's go to the lower time frame now to see what it means to do this. On the 1 hour time frame now, this is where you bring your market structure, break-off structure, all those concepts. Now notice what price did. After sweeping this liquidity, notice what price did. After clearing this liquidity, the next thing it did was to shift structure here. You see very clearly, shift structure on VIX 75 right here. And what did you see? Price coming back to a mitigation block, and then that was when the price movement starts. And you're going to see it time and again. Break of structure coming back to fair value gap, boom. Look for a break of structure, boom. This movement will continue until the next liquidity has been cleared. So all you need to do is to follow it. Don't make assumption. Once you know what the 4 hour time frame did, look for the next area of liquidity and follow it. It doesn't turn direction anyhow. It makes sure that it sweeps liquidity. Notice what price did here. Let me show you another thing that price did. Look at this, please, on the 4 hour time frame. You see, this was where the liquidity was. Price came right here. It didn't sweep the liquidity above. Buy side liquidity is what price is always after, or the sell side liquidity. So if we take this area, let's assume this area from here upward till this area is where liquidity is. So as small as this, we know that liquidity has been tapped into. So we are very much okay to continue the sell if we see an opportunity to sell. But notice what price did here. Price did not sweep liquidity on the buy side here. And if you go to the 15-minute time frame, price shifted structure here. Price shifted structure. All right, price shifted structure clearly here. But did it now reject price from here downward? No. Why? Because the 4 hour liquidity above was yet to be cleared. So if I see a shift in structure to the upside here, am I going to take it? That is the question. Let me bring it down there. So if I see a shift in structure here now, is it good for me to take it? No. Why? Because the price movement is already telling me that there is sell side liquidity here, and that is where price is going to. Nothing is going to change the mind of price. So as price is moving, if price clears the 4 hour sell side or the buy side liquidity, the next movement it does is the other side of liquidity or the opposing liquidity. This thing I'm telling you now is enough to give you a head start to trade this. And look at what price did after sweeping all those liquidity, shifting structure, break of structure, coming to fair value gap. You can do your fair value gap, order block, and all those other stuff once you have cleared liquidity, look at the break-off structure to the upside right here. Let me clear it. Let me show you, because I'm using MT5, I may not have the flexibility of doing a lot of things right here. All right, so notice what price is doing here. Again, price came back to a fair value gap, touching order block, boom, break of structure, fair value gap, boom, break of structure, fair value gap right here. So you can do these things right there, but if you don't have the concept of those liquidity clearing, you will not be able to do it. Shifting structure, which was a lie, because there was a liquidity upward, you get inducement. So if a shifting structure comes in before a liquidity was cleared, it's a trap. It's a trap, guys. Don't get into it. Look at this one now. So I have liquidity here. I can have confidence. This is step index. I can have confidence that maybe price is going to be rejected from there. The downward movement will start from that side. But if you don't clear liquidity, you have no business going into that direction. All right, so now that I've cleared liquidity, I can have confidence on this. Look at this. I can have confidence on this break of structure and say, okay, or maybe this shifting structure and say, yes, give me an opportunity. Price came back, boom. Break of structure, price came, boom. Inducement touching this bearish order block, and you're going to have movement downward. All right, so those of you who don't have patience, or you don't trade with stop loss, and you think that you can turn the direction of the market at every point on synthetic, you are only wasting your time. It doesn't work that way on synthetics. It does not work that way on synthetic. So you need to be very, very meticulous with your trading system when you're trading synthetic index. All right, I hope this is helping somebody out there. All the concept you're using works as far as you're using ICT. But if you are not using it in the context of what I've shown you, liquidity, time frame, and entry. So if you are within the range of that 4-hour range, or maybe let's give this like this and give it like that. Let me show you something. I just want to show you how this works. Background. Let me take out background. So if this is the range, all right. So you have the 4-hour movement, boom, liquidity there, coming there. So if you have price moving, you don't just assume that price is going to come. No, it is targeting liquidity above here. So that is what it does. It's a ranging asset. It does most of these things, you know, at a point. This is what I've observed over the few times I've been trading it, and I thought, let me just share with you so you can see. And if you can do this little correlation right here between let me go back to that, between this one, you see step index and VIX, they have this negative correlation. If step index is going bearish, you will mostly see VIX 75 going bullish. So that's what I've observed with it. So if it is going bullish, notice what it did here. It was bullish, and then this guy is bearish. So you can check the correlation. So you don't want to go into trading it negatively. So if you see the correlation, you should be able to know what is happening right there. All right, I hope this helps somebody out there, guys. And if you find value in this video, let me know in the comments. I will be happy to make more videos on synthetics, and more videos like that will help somebody out there. Thank you guys for watching. See you in another synthetic video. All right.